Good day. Ira Epstein of Linn & Associates with your metals market wrap-up for this Tuesday, May 5th, 2020, and the time right now just after 4:30 p.m. Central Time. So it's an interesting day. The stock market, a powerful day. It gave up in the last hour of trading about half the gains that it had, but it was strong all day long. The gold market was trying to come up. The last quotes I actually saw were higher than this, closer to the 1715 area. Silver stayed up in this general area. Copper was up today. And what's going on is industrial metals are, in part, I think the silver gold got a little too wide on the ratio. They might have narrowed that. But as a group, industrial metals have to be looking and saying factories are reopening. Now, what the productivity will be, what the social distancing will be, what that means, we don't know any of that yet. Nobody knows it yet. We're just getting into this around the world. However, producing is better than not producing. Consumption is better than no consumption. And that's what's going on. So you're getting something of that action in the market. As for the gold market, I would think that it's doing this. It's looking around and saying, you know, I'm looking. Hertz is declaring bankruptcy. We're seeing that J. Crew just declared bankruptcy. How far can Neiman Marcus be away? Others, it's coming. And that's the senior ones. What about all the little companies that just aren't going to make it? The restaurant industry is going to get hit like you've never seen. That's just them. What about sports? They're getting hit, but they have TV at least. But I'm talking the big sports. Smaller sports? No, they're all in trouble. So you watch this and now you're wondering, as euphoric as it is and as great as it is to get it all going, I think around the corner there's some reality. And as I said, I think gold's waiting to see what that is. I'm just shooting off my mouth, but that's what I'm expecting. When we look at the weekly chart of closes, I'm going to keep repeating, you're only $26 or so from the highest close we've had in years. That's not much in a market that is consolidating this whole leg up. It hasn't shown any sign yet that it wants to return to these lower numbers. And on the daily charts, we have been under the influence of a bearish trend. If you took this and you connect these lines, you could do this one better and draw it on. You can almost visualize where the downtrend line is there. The uptrend line, if you connect these two numbers, you're just moving into, if you will, coming in like a triangle right into that apex of it, and that's what I think this market is doing. If the market's going to break out to the upside, you've got to get over 1726. Then you have to close over the 18-day average of closes, which it would be, and I'll show you that in a minute. That also means that the bears have to stop the market from doing that. Why would the market turn bullish? Because under the current pattern, we see it, lower highs, lower lows. But with what you did today, if 1726 were taken out, the swing line would then say you have higher lows and a higher high, and then you look at the 18-day average, and that 26 is right next to that 25 area. So I'm giving you both sides of the equation. The bears, that's the number they have to defend. The bulls, I think they'll go long. If the market closes over that 1725 number, the risk is going to be back to whatever the low is, be it here or a lower low, as long as it doesn't take out 1676. If you took out 1676, that pattern would change. So that's the current pattern as I've got it. What about potential support and resistance? To the downside, I see the 1679.60 level, the lower Bollinger Band is the support. If you clear 1726 and close over 25, the upside could be back into the 1770 level. So this is the first time I'm seeing the potential for another run to the upside if events happen. But the bears are controlling it right now, and they're still in control of trying to get it down right there. The tug of war is right in front of us. In the gold-silver ratio, you probably got a little high up here at 115, and the market's trying to come back a little bit, but gold is still stronger than silver as long as it stays over that red line, the 18-day average of closes. The bias favors the gold. In the July silver, you almost see that on the chart. Silver doesn't look anything like what gold can do. It's still very much in the bear camp. Now, if we come back to yesterday's low in the market, it was 1476. Today you got to that exact low and you're trying to come up. What could happen here, the coulds. Close over 1545.60, the bulls take over control with an uptrend. You'd have higher lows, higher highs, and momentum turning up on you at the same time. What's the number the bears, if I were bearish, I don't want to see taken out? Yesterday's high, which was 1522.50. That is the number I don't want to see taken out. That would break this bearish pattern. As for the support in the market, it's literally from today's low 13 cents away at the 1463.5 area, and you're oversold. I don't see new bears cutting very aggressive on an oversold condition. In the copper market, we just keep narrowing in these black lines. You're going very much sideways here, and you've got to think of this as a spring winding up inside of this a pipe, if you will. And this isn't as clean a pipe as some of the others we get on charts, but that's what it's doing. And as I tried to give an idea when this happens, trying to catch breakouts up or down, they often fade until the market's ready to burst out of it, and that's what's going on. You got up to the upper Bollinger Band, you went nowhere from there. The signal to get long came in right when you cleared that number. There was nothing there. You came down and you're rejecting that. So not a signal that I'm seeing at all. In the platinum market, you took out the 766 number, so now you got a higher high, lower low, 3 days in a row, stuck at that line in the sand, and as that's going on, the Bollinger Bands are narrowing themselves in, forming that pressure. From there, good things happen. So trends are about to set up. Now, which way they're going to go, that'll be our job to try to catch, but that's what's going on. In the palladium market, you're still sinking away. Look at how the Bollinger Band has been containing price. You stepped out of it here, right back in. And this market has a history of staying well contained by that. Are we trending? No. This is more of a washout number. From the old highs, you're down $1,000 an ounce almost. Well, let's see, on this chart, it's 27 something, and we're down to 1756. So I'm pretty accurate, about $1,000. That's a heck of a drop, almost a 40% drop in price. In the dollar index, let your eye focus on this. What is the trend right now? No trend. You negated it today when the market took out 99.95.5. However, the downside target had been hit at the lower Bollinger Band, and the market has again come back up, taken out that high. So now you've got that higher high, lower low pattern fighting a battle at the 18-day average as momentum is also going flat on you. You know, one of the things that we try to do is teach you these techniques, and we've put together a futures kit that for those of you that are new or a little more advanced in the futures markets, I think you'll find interesting. You'll find that we cover all these different areas in there with different brochures, different PowerPoint presentations. Everything's in the kit. So the kit, by the way, is a link we send you, and when you open it up, you've got all this in there, and we link into the Chicago Mercantile Exchange. We give you ideas of all these fabulous chart patterns, technical analysis, a little bit of history of it, how it works, why it might work at times, why it doesn't at others. You also get to get ideas on options on futures. So if you're looking to do that, you work with it. Cause and effect. That is a monetary policy cause and effect. Government prints money. What's the effect on the markets? Then you get our pivot point series, a 3-point, and I'm using those right now. So I've been looking at pivot points on a regular basis because this market's lending itself to it. Then the educational brochures. I mean, it's a real kit. We didn't just put together a couple of pieces and, oh, look at our kit. This is a lot of time and effort that went into this. How you get it's pretty simple. You give us a call, or you can go to our website, and on the website, just go to the free offers. You can choose this and other parts. You might want to see our market reports, things of that nature. Let us know, and try our charting software. I think you'll find it interesting. You can also get to this area by clicking right here if you're watching me on YouTube. Have a great day. I'll see you all tomorrow.